Every few months, the same headline resurfaces. Big changes are coming. Insiders say it's imminent. This time, it's really happening. You've probably seen it. A bold title, a countdown, a promise that your life is about to change. This time, the claim is about the Iraqi dinar. Millions of people around the world have bought this currency, hoping for a single event that could transform their finances overnight. It's called the RV, the revaluation. But here's the question almost nobody asks out loud. Has this ever actually happened the way it's promised? Stick with me, because by the end of this video, you'll understand exactly how this claim works, why it keeps coming back, and what the evidence actually shows. This content is for educational purposes only and is not financial advice. Let's start at the beginning. The Iraqi dinar is the official currency of Iraq. After the Gulf War and later the 2003 invasion, Iraq's currency lost significant value. A new dinar was introduced and old, sanctioned notes were phased out. Since then, the exchange rate has remained low compared to major currencies like the US dollar. That's not unusual for a country that has spent years rebuilding after conflict. But somewhere along the way, a different story emerged. A story that said Iraq's currency was secretly about to skyrocket in value. That behind closed doors, world governments and banks were preparing something enormous. That everyday people who bought dinar early could see extraordinary returns. This idea has a name in online communities, the dinar RV. According to the Texas State Securities Board, the Iraqi dinar scheme has been surprisingly long-lived, giving federal and state regulators and nonprofit consumer groups time to issue repeated warnings about it. Multiple state regulators, including in Alabama, describe the Iraqi dinar investment opportunity as a scam that has existed for more than a decade and has periodically regained popularity. So how does the claim actually work? The theory usually goes like this. Iraq will suddenly revalue its currency, similar to how a country might adjust its exchange rate. Believers argue this revaluation could push the dinar's value up dramatically. According to the Alabama Securities Commission, the opportunity is often pitched as a can't-miss method by which an investor can profit from a severely undervalued Iraqi currency that promoters claim is certain to appreciate in value in a short time, typically after buying at a rate of 1,000 or more dinars to $1. It sounds simple. It sounds exciting. And that's exactly why it spreads. But real currency valuation doesn't work through secret announcements or countdowns. It's shaped by a country's economic output, oil revenue, foreign reserves, inflation, and trade relationships. Decisions made gradually and transparently, not through private tips. Nations don't multiply their currency's value overnight without a matching shift in real economic fundamentals. If they did, it would trigger massive instability, not prosperity. This is where the story starts to separate from the evidence. For years, dinar promoters have pointed to insider information, people who supposedly know when the revaluation will occur. This isn't just a rhetorical pattern. It has shown up directly in fraud cases. In one instance, the SEC filed a complaint against a Utah man, Joshua J. Hansen, who was accused of swindling investors in a dinar scheme by claiming he had inside knowledge about the Iraqi government. According to the SEC's complaint, as reported by Forbes, Hansen told investors between 2009 and 2016 that he and a business partner had special security clearances allowing them to invest in Iraqi dinar and oil contracts with foreign governments and large oil companies. 46 investors reportedly put money into the scheme based on promised returns ranging from 10% to 15,000% within 90 days. Hansen later pleaded guilty to criminal charges. None of the insider claims commonly used to promote dinar investing have been confirmed by any recognized central bank or financial regulator. And here's an important pattern worth noticing. The predicted date always changes. It's coming next week, then next month, then any day now. This pattern is common in speculative financial claims, a moving timeline that keeps hope alive without ever being tested against a real, confirmed outcome. So if there's no solid evidence, why does this claim keep spreading? To answer that, we have to talk about incentives. Content built around the dinar RV can generate significant attention, views, subscribers, and engagement. Some dinar sellers charge substantial markups on the currency itself. In one case examined by CNBC, investors bought currency through a firm called BH Group, which charged a markup of about 20% on average, according to prosecutors, as part of a scheme that drew in roughly $24 million. A separate case highlighted by the FBI involved a company called Sterling Currency Group, also doing business as Dinar Banker, whose defendants were convicted in 2018 of conspiracy to commit mail and wire fraud after selling Iraqi Dinar to investors. This isn't about attacking any single creator or channel. It's about understanding a broader pattern documented by regulators and law enforcement. Content that promises fast wealth tends to perform well. Urgency drives clicks. Countdown videos tend to outperform balanced, cautious ones. It's simply how attention-based platforms function. That doesn't automatically mean every creator has bad intentions. But it does mean viewers should ask a simple question: who benefits if I believe this? And who benefits if I keep watching? Financial regulators have addressed speculative currency schemes like this many times. The Commodity Futures Trading Commission and the North American Securities Administrators Association have jointly warned that off-exchange foreign currency trading by retail investors is, at best, extremely risky and, at worst, outright fraud. Those same regulators point to a consistent warning sign. Investors should be wary of promises that sound too good to be true. Claims like guaranteed six-figure profits or doubling your money, because get-rich-quick schemes involving foreign currency trading tend to be frauds. Legal consequences have followed some of these schemes. Beyond the Hansen and Sterling Currency Group cases already mentioned, federal prosecutors in Ohio pursued a separate Iraqi dinar scheme in which, according to the U.S. Attorney for the Northern District of Ohio at the time, organizers fabricated stories, including false war hero claims, to solicit millions of dollars from investors. The pattern regulators consistently highlight is simple. Legitimate economic changes are backed by public, verifiable data, not private tips, insider whispers, or countdown clocks. Behind every speculative claim like this, there are real people. Regulators such as Washington State's Department of Financial Institutions have warned that consumers are often not told a critical fact. Dinars can typically be redeemed only in Iraq, since most established currency exchange houses and banking institutions cannot convert dinar back into U.S. dollars. That means people who buy dinar hoping to cash out later may find very limited options for actually doing so. For some, this becomes more than a financial decision. It becomes an emotional one. Hope can be a powerful motivator, especially during difficult financial times. This is not about mocking anyone who bought into this idea. Many were looking for financial security, stability, or a way to help their families. Their motivations were completely human. But it's important to separate hope from evidence, because financial decisions built on unverified promises can carry real risk of loss. So what actually works if the goal is long-term financial growth? Independent, nonpartisan financial literacy resources, including those published by securities regulators themselves, consistently point toward transparent, well-established approaches: diversified investing, retirement accounts, emergency savings, and working with licensed, registered financial professionals. These aren't exciting headlines. They don't promise overnight riches. But as regulators like the Texas State Securities Board note, one basic safeguard applies to any investment opportunity. Ask for a prospectus or offering document containing the company's history, operations, and financial condition. And if there isn't one, don't invest. It's also worth confirming that anyone selling you an investment is registered, since registration involves testing, background checks, and periodic inspections. If you're ever evaluating a financial opportunity, ask these questions. Is this backed by verifiable public data? Does the timeline keep changing? Is the seller registered with a securities regulator? Does someone benefit financially from me believing this? Simple questions like these can protect you from a lot of financial harm. So, is the Iraqi Dinar RV finally happening? Based on publicly available information from financial regulators, there is no confirmed evidence supporting an imminent currency revaluation event of the kind promoted in these videos. What is well documented, instead, is a long history of fraud cases, regulatory warnings, and investor losses connected to this exact claim, stretching back over more than a decade. That doesn't mean everyone discussing this topic has bad intentions, but it does mean skepticism, patience, and independent verification are essential. If this video helped you understand the topic a little more clearly, consider sharing it with someone who might be researching this claim. And if you want more evidence-based breakdowns of viral financial topics, subscribe, because separating fact from hype is exactly what we do here. Stay curious, stay informed, and always verify before you invest.